A lot of people find it hard to believe that cyclical analysis is actually a form of technical analysis. They often misquote, misjudge, and make you feel like you're a baboon or a fool for actually even delving into this topic. A lot of people overlay different things onto their charts, such as cup and handles, technical analysis forms like that, Elliott waves, Dow theory, on-balance volume. I found that cycle theory is probably one of the most powerful if you can learn to understand it correctly. What you can see in front of you is this week's price action of Bitcoin. We were watching, let me just go ahead and clear all this. We were watching the price action from the 17th to the 23rd of this week. So the price action we can see is basically the time period that we're watching. And this is the cyclical curve of the week that we were watching from the 17th to the 23rd. So as we can see, we have two lines. We have one that is a blue line, and then we have another one which is a red line. And these two lines, one is dominant and one is slightly less dominant, so we're running different curves here. But one of them was the less dominant line, which I would like to refer to as the less dominant curve. And the only reason why it's less dominant is that it takes in more price action over a shorter period of time, and therefore we get different swings that run in different periods to our, quote unquote, more dominant cycle, okay? So that's the only reason why I classify it as less dominant, more dominant, because we're just looking at two different time cycles. So how do we look at a time cycle that is less dominant or more dominant? Well, let me go ahead and explain that to you. So if, for example, we're looking at the more dominant time cycle, this would include things like 4-day cycles, okay? We'd have a 4-day cycle, we'd have a 7-day cycle, and we might even have like an 8-day cycle, okay? This is a more dominant time cycle. So it's basically taking the amalgamation of these and it's building curves. As we can see down the bottom, we're building curves with these time cycles, and then once we have those curves, we can then amalgamate them into a preferred curve. That's basically all we're doing here. And the same thing for the shorter time cycle. Let's say the shorter time cycle might handle a few things, such as a 3-day period, a 4-day period, or even maybe a 5-day period. We're just looking at the shorter term moves in the market. So I wanted to talk to you right now about this cyclical curve for the week, because a cycle is never wrong. And I like to say that the cycle is never wrong, not to give myself an ego boost or say that I'm never wrong with cyclical analysis. But once we have the cycle that we're looking at and we can see it play out, it generally is never wrong. The only thing that occurs is that it inverts. So I wanted to focus our attention on this red curve, okay? We can see that the red curve comes up and then it goes down and it sort of stagnates across here before rising again. Now if we were to look at price action, we can see that the price action came into here and it practically inverted this price action up here, okay? That is an inversion. So let me go ahead and clean up the chart. So instead of price basically moving from this low down here, if we were to categorize this low with this point right here, instead of it moving up and basically topping out with basically both the cycles here are topping out, okay? All it did was market price action moved down into this time period that we're expecting a top, and then it moved up, okay? It's not incorrect, it is an inversion. And if you want to do cyclical analysis, you actually have to understand and accept that inversions are going to take place. Now after we got this inversion here, so I was looking for a possible top on the 18th. You may recall in another video I was looking at for a top on the 18th. So let me go ahead and open up Paint. Okay. Righto, so the preferred curve that I had last week was something like this, right? And I was looking for a top around the 18th, and then I was looking for a bottom around that 20th to 21st. That would have been the ideal situation for a bullish market, and that would have been a good trade setup. Instead, what we had is we had the bottom on the 18th and not a top. Okay, so we've got to watch that. And then on the 21st, we actually had a top. So the market moved from low to high instead of high to low. So that is what you really need to understand if you really want to get into cyclical analysis, is actually how to handle these inversions. Now the inversion was coming in on that 21st, okay? Now I could see that inversion was coming on the 21st. It wasn't hard to actually see it all. So I'm just going to show you something else now over on another page. It's not to ego boost, it's more for education, okay? Because I'm trying to help you out in learning how to interpret these cycles. So I'm just going to bring this up now. And this is in the Mastering the Markets backend. And I posted this a few days ago. So it occurred, so this is the chart at the time. Okay. So this was posted, I posted it around the 20th of February, okay? And I just wanted to go through what I had been explaining. So I started off by saying, you're probably thinking that the Bitcoin curve was wrong. And I can understand that people would think that the Bitcoin curve is wrong because I had been calling for a potential top on the 18th and then a bottom on the 21st. But because I'm always trying to show people that the Bitcoin curve is less likely to be wrong and is more likely to be inverting, I wanted to highlight this fact. So you may recall I was expecting the high to come out on the 18th and that would set us up for a low around the 20th to 21st. And if we get a top in the next 24 hours, all we're doing is basically flipping our curve, okay? It's simply an inversion. The other one that I was looking at was our mass pressure charts for Bitcoin. And this would have set us up for a nice low around the 21st. Because I had actually realized that the cyclical curve for Bitcoin is actually inverting. So instead of having a bullish 2 months, if we actually inverted all our curves, we could get a nice setup by actually inverting them. Okay, so everything right now is being inverted. So the actual market bias that we have right now is more bearish than it is bullish. Now the curve will invert for as long as it needs to before it re-inverts, or uninverts I should say. So it might invert for 1 month, it might invert for 2 months, it might invert for 6 months. But eventually if the cycle does uninvert, it will uninvert, and we will be able to see that because price action will be going against our initial forecasted curve. So our initial forecasted curve that I put out back in December for the guys in the back end for January to March, actually shows a bullish market bias, okay? However, like I showed you in the last video, if we flip these curves, we can actually see that they're lining up to the bearishness, and we actually had a low here that we were watching around the 21st. So these are all the factors that I was looking for a potential low around the 21st, okay? So what we can see here is we have the market forming a low on February 18th, moving higher. When we were expecting this time period where the market was going to form a bottom, yes, it did form a bottom on this date period, but it also formed a top. Now what the unfortunate thing for us is that we're stuck between a wedge, okay? We're stuck between a low and we're stuck between a high. So whilst we could come out and say that, okay, Jonathan was right, we actually did move into a top and that we should have been watching for a top instead of a bottom like he said 2 days prior, and because all we're doing is we're using the same dates, right? The dates never change when we have the cycle correct. All they do, we use the sun, okay? So we're using solar degrees, so we're using the sun, and once we have our sun's angle or our time periods that we're watching with the sun, the dates never change. We only need to deal with the polarity flip of these, okay? So what I'm trying to get at is here is right now we're actually stuck between a wedge, so we don't know if this date was actually a high or low. We'd like to call it a high because we moved out into a top, market came down into our low point they were expecting, but we don't know if it was a high until it actually breaks this low point. Okay, that's how we call it a high or low, because this price period is actually wedged between that date period. So we need to be patient on this period. This has happened in the past, and all we can do is really look at our next turn dates and then be patient. So let's say, for example, I was looking towards the 25th as the next turn date, hypothetically. I'm going to say hypothetically because I don't want to give away too many secrets, but if we look towards the 25th as the next possible turn date, so 25th, 26th time period, that'll take us out to, let me just untick this. That'll take us out to around Monday, Tuesday time period. Then that would give us a guide on if the market's likely to be moving in a top or bottom, and how it would react with the old high that was made. So where does that leave us? Well, we're going to actually update this chart right now. I'm going to show you out to next week. Okay, so it's now going to basically reactivate all the curves, realign all the curves, and deliver us a forecast for next week. So next week's, this is actually a little bit early. Okay, so I want to get more data into the 23rd if possible. So basically, the best time period to be doing this would be later on tonight or tomorrow morning. But using the data that we have right now, we can get a suggested curve for next week. Now, if we look at next week's curve, at the moment, we're probably more bearish than we are bullish. Now, the reason why I say that is if we look for the 24th out to the 2nd, so that's this period right here, we're coming off a top and we're heading down, okay? Then we're heading up towards the end of that week. So we're looking for a potential low around that 25th to the 26th. So what I've done here is I've got time by solar degrees. Okay, so time by solar degrees, if I use that method where we look for the angle of the sun and we look at getting those sensitive degrees on the sun and we pinpoint those dates that those sensitive degrees are landing on, which I teach in the time by solar degrees method. Then we look at our cyclical curve, which I've just updated it, so I haven't actually seen this before. But it's signaling that potentially we're going to get a run higher in price. It doesn't mean that the price is going to run higher than this old top, but that the market bias would likely be higher. It's going to make another top, and then we're looking to form a low around the 25th to the 26th. I would be probably not be buying until our next low date comes in, unless an inversion or polarity flip occurs, around until the 25th to the 26th. Okay, so that would be the general bias. After a low comes in, on the 25th to the 26th, we then use our next turn dates, which would take us out to around, sensitive degree would take us around to the 30th, or there is no 30th in this month, so around the 1st to the 2nd. And if we combine that with the cyclical analysis, we can see we're probably going to hit a top around the 1st to the 2nd. There is a likely top around the 27th, so we'll see what happens there. But turn dates, such as our solar degrees method, would be suggesting a possible top between that 30th, which doesn't exist this month, so 28th to that 1st to the 2nd. 1st to the 2nd being primarily the location I'd probably look at. So then that would give us an ideal trade if the technical analysis lines up in this pattern. Now we can't go out any further because these waves become inaccurate the longer we go on, because as we can see, if we zoom out, the waves actually disappear, okay? So the waves are only valid for basically this week that we're looking at, and it takes in data behind it. Okay, it doesn't take in data forever. The waves will eventually fizzle out, but it takes in data behind it, does its cyclical analysis, tries to line up all the tops and bottoms, and then gives us our curve. Okay, like I said, we're only going to be using this curve for about 1 week, and then the curve becomes invalid. Okay, so once the curve is done, it becomes invalid. So if we zoom in right now, taking us back to where we are today, if I can zoom back in, I cannot zoom back in, there we go. What I'd be looking for is possibly a move higher over the next 24 hours or so. We want to be moving into a top. If we get a top, it doesn't have to be higher than the top before. I'd be looking for a low, and that low is likely to break. If it does break, that low is likely to break the low that was made on the 21st. And if it does do that, then that would tell us that the 21st was actually a top and not a bottom, okay? Now, one thing that we should also be watching out for is that this major sell-off occurred on news. Yeah, that news event was that some exchange was hacked, and all the currency or the cryptocurrency was stolen. And this goes into the other issue that we would also say that everything happens according to time. Okay, black swan events generally always occur on our turn dates. Okay, so that means that the events that have occurred on the 21st, we should be able to go back in time at sequences, you know, whether we're using the trine or the square. If you understand GAN, okay, if you understand GAN, we're putting everything into a circle. I don't know why it keeps skipping out on me all the time. And then we'll put our triangle in there, we'll put our square in the circle, and we'd find degrees in the past where the market is likely to provide us signals that this turn date would have been important. If we also look at events that occur in the world, we might also find that the exchange that got hacked may have run into some issues on those dates in the past. Okay, so there's no telling, because I haven't looked into it, how far back this goes. But if we just use time as an indicator of events in the world, there is a likely event, or there is a likely scenario that possibly 120 degrees ago, or 90 degrees ago, 90 degrees in time, so we use the sun, so it's about 90 days ago, events could have been unfolding that had set up this date to actually come into fruition. So this is how we use the time cycles. Now, whether you are pro-astrology or against it, it doesn't really bother me. The most important thing is that you begin to learn how to analyze the markets with this in mind, okay? So that's all I have for you, just an update and a projection out to next week. Look for the curves, so we're looking for a possible sell-off. Doesn't have to be this steep, okay? Looking for a possible sell-off into the 25th, 26th time period where the red and the blue come down. That would be the ideal scenario if we're looking for that bullish case higher into the 28th. I'm not doing any directions on the market because the market can invert outside the cycles, but this would be the initial setup, okay? So that's my thoughts, and I'll talk to you again soon.